So what are we looking at? Well, on the side here, we're looking at our volume profile. Now, I like to throw something else up there. It's also called the TPO profile. So, let's do that. Alright, and we'll hit apply. Alright. Now, I got rid of the other profile, and you'll see it's pretty well the same thing. Slightly different when they're overlaid, but a lot of stocks right now, as you can see, Nike is hitting this spot right here with the 200 moving average. And with the slowest moving average that I'm using, it's like the 9 period. Okay. We can see where they all start to line up and cross each other. Now, this is the Eller's, these three lines here is another, indicator. It would be the simpler decycler, or simple decycler. So we'll take that off, and we'll take that off, and we'll take that off. Or, let's do that. Alright. Now we've just got a few moving averages. The 9, or the 8, the 100, the 200, and the 55. Okay. So, we can see this is our 8 period. The green is our 200, 100, and our 55. So our 8 period and our 55 period moving averages are going to be where we're going to get a lot of our cross, action from. But right here, this 8 period went through the 200, so that would be almost considered not necessarily a golden cross, but a very nice crossover. That's showing us positive price action. As you can see, it went through it, but it also crashed back down through it where it was before. So it went up, popped up, caught a couple bags. All these people up here, hopefully, right here, they're holding bags. So hopefully they're shorting. And if we can drop through here, then we can short it all the way down to here, which will be about this level. So we might even get to see a short to 124.57. Yeah, that's very possible with Nike. So, and what we're doing is we're just developing different types of studies, things that people haven't seen before, things that everyone else isn't using. So we can identify certain, trends, certain things. And we've been building our scanners, and of course we've been building multiple strategies. We've got quite a few strategies in here. And they're really, really interesting, to say the least. I've got some ones in here that I've found and built that you really just would not expect to see anything come positive from it, but you see, just very, very good, clear signals for buying and selling. I like putting the lower chart overlaying the top chart. I don't necessarily need to read candlesticks anymore. So, and that's how you've really gotten to something good, when you don't need to read candlesticks anymore. But, here's a nice, cross, strategy. Nice crossover strategy here. And let's see what the number 9 is. Okay. Now this is my Arun oscillator, but it's giving you the arrows of where to buy and sell and buy, and buy back. So, you can't get clearer signals than tiny little arrows. I mean, it's laid out for you. I mean, buy here, buy here, sell here. I mean, it's laid out so very simple. And now what we can do is take these strategies, and so you take this strategy, click on the little gear icon, or let's see here, or you click on the scroll, okay, and we can go in here and we can highlight, all of this, alright, and we can turn it into a scan. Okay, now we don't need all of that for the scan, but we don't need that, but we do need that. Okay, so we'll copy. Alright, and we will go up here to scan. Okay, now we'll make a new scan. We'll add a filter. Okay, so we'll add our filter here. It will be a study. Okay, and we can get, we'll go in here and we'll just click our pencil. We'll hit delete. Okay, now we'll hit add condition. Okay, we'll select condition. We'll go study, and then we can pick the study that we were using or the one that we just highlighted. Okay, now I believe we were using new study, what was that, number 9? So we'll go down and we will grab new study number 9. Okay, and let's see, how do we want that associating? Let's just go with let's see, crosses above, select, let's say, we could say it crosses above the RSI, we could say it crosses above, a number, a function, a price. So let's say it crosses above a value of 50, which would trigger, okay, value of 50 within 1 bars. Okay, maybe that's not going to do it. No? Okay, let's cancel, because really I wanted to paste that code. Okay, so let's do, add another filter. Let's try it again. We'll do delete, hit our filter here, we'll hit edit. Okay, as value. Okay, alright, cancel. Maybe that's what we wanted. Okay, so we'll delete, we'll add, come back here, we'll go to study, we'll take our new study 9. See, I was pretty sure we went, have a value, but we'll do is true within. Okay, as value, not gonna work, equal to, maybe there's something in there that we just don't have with this study that's made, so, okay, let's try it a different way. Okay. Let's see, let's go back to our charts. And this is charted up here, so we're gonna want it charted lower. Okay, so I see the problem here. Alright, so we want our new strategy, and we'll click on our scroll here, and we never did, it needs to say define lower, okay, and or some of these defines or plots need to be defines. So, you know, it is plotting, you know, the overbought and oversold on the upper part of the chart. Now we can plot it lower, or we can define it, you know, define them, and I think that's what we're going to need to do in order to make this a strategy. So let's go through here, and we will change all of these to defines, okay? So let's change that to DEF. 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 Okay, and we will get rid of this stuff because that's all coloring. It's not super important. Okay, and we will call this, one new strategy 10. Alright, just in case we still want to play with it later. Okay. Now let's hit apply, we'll hit OK. Now we've just got the arrows with no lines. Now they're just going up and down, okay? And hey, do I like that? To tell you the truth, it's really not bad, you know? Okay. Kinda neat. Kinda neat. So, but that's the idea of playing with these studies. Now we can get all of this into a lower. Okay, we just have to go up here into our scroll, and we'll go in here and we'll define lower. Got an issue with the space boards, the keyboard, so we're gonna have to work with it here. Let me see here. Does it usually say hash? I believe it normally would, wouldn't it? There we go. Now, let's hit apply. Hit OK. And apply. Okay. We didn't get anything happening there. Let's get a little renewal. Alright, nothing there, but let's keep working with that. Alright, but let's go on to some other, you know, new studies. Let's hit apply here. Okay. And let's check out this set. Okay, now this is a very, very interesting set. There's 2 of these and several of these indicators I've found that all show coloring like this. But not all of them are as easy to read as, you know, simple. So as we can see, certain things happen, you know, when these colors are all aligned. You know, or when they're in a certain, you know, say way. You know, and as this spike happened, we were blue, but you know the volatility was red. You know, it was moving. Okay, and we can go down and find another one of these. Let's use this one. Okay, now this one shows it in green and red, and it's very, very distinct. I mean, you can't not see it any better. We're using, let's get rid of that for now, we'll hit apply. Okay, and you can really see this green and red coloring. and buying when it switches over into green, and selling when it's almost finished with red, or buying at the bottom of red and selling at the top of green. But either way, this gives you a really, really good idea of up and down is not the only way you have to trade. You can trade in several different ways, using the volume and color as your indicators. Especially when you see a big cloud come in from the bottom like that, that's red, and it was all green before. So I found some very, very interesting things here. I found stop loss LX, stop loss SX. Okay, so we can add those, add your stop losses in, and then you've got your take profits. You can also add those. So you can add your stop loss, and then you can come up here, throw your take profits in, wherever they are. They're in here somewhere. Trailing stop loss, okay. Maybe it's in the take profits in the study, in one of the studies. Either way, I've seen it. It is here. It exists. And we can add all of those together with our different, say, codes. Now, I have been able to find and see several different indicator setups, and I've been able to find some things that really, really, really work. And some of them aren't as nice as others. Some of them are just kind of like blah, not so great, but they kind of whatever. But they work. And a lot of our strategies we're going to find, are going to be that way. Where were the strategies I was just finding there? Okay, a lot of them were ones that here we go. There's new strategies, and we got some new studies, and some new scanners and stuff. Let's check this one out. Hit OK. Add selected. Add selected. Apply. Okay, now this gives us some interesting cues here. Let's back out of our time frame. See what we're really getting. Okay. That's neat, but we don't need anchored VWAP right now. We're not trading. Let's just go down to our studies here. Find where they're named at. And let's use the blast off 2, or we could go with the fancy blast off. We'll get rid of that one. We'll save that, or we'll apply it. And here we go. Now we have pink candlesticks indicating volatility, and it seems like they've just gotten all the other candles to be white, while they've gone in and labeled dojis and hammers as volatile or volatility, which is true. And as a candlestick reader, you would be trained to look for these dojis and recognize them, and draw your support and resistance around them, trend lines, whatnot, yada yada, and so on. And so you would use them to your advantage. These pink dojis. And I say buy the doji all the time, because that's typically where I see a lot of signals happen at. And it is true for this indicator, where they are using it as a kind of volatility-based indicator, and we can overlay this with other indicators, indicators that track highs and lows. I mean, we can really build our own, algorithm up much more than this, just to show us certain things. And yet we don't need to. So, we've got so many different sets here, and it's really unrealistic, the stuff that you can do. It's crazy. It really is. You have so many things at your disposal. Now we can see that gray is more of a consolidation, purple is a run or rising, green is going up, yellow is calming down, gray is consolidating. So we can see this, we can see the different power in the market. There's a big hammer right there, a big green hammer on an earnings. Look at that. Wow. And on an earnings day. How about that? And our smart earnings scanner would pick that up. Just to put that out there. But yeah, the other indicator was trained to find these dojis, and we can go around and point out all the bullish and bearish dojis, but we've developed some really good strategies here, and I intend to use them to the fullest. Looks like we've got here we go. Let's hit apply on that. Let's get rid of the PGO. We'll hit apply. Let's get rid of that. We'll hit apply. Hit OK. Okay, now we've got auto Fibonacci retractments on the screen. So basically we have all of these Fibonacci levels here already put in on the screen for us. Something that you're not going to have right out of the box. And of course, we can find these things out there. We can make them. We can, add them within Thinkorswim. So they're there. But that's awesome. I don't use Fibonacci too much. I program my moving averages in as Fibonacci numbers. That way, my moving averages will land on a Fibonacci, or and they tend to be pretty accurate. Very, very accurate, actually. And then there's of course this consolidation box. That was a really neat one. And if you take a look around out there, you'll find this consolidation box is a lot like, it's got similar features to, some other things, but it's got these, retracements in it, these Fibonacci's, and they're automatically adjusting. Some really, really interesting things. Look, where is that? The big bar breakout. Let's add that. Let's hit apply, hit OK, and here's our big bar breakout tool, and where it breaks out above the VWAP, where there's a big bar, it will light it up in pink for us, or wherever there's a big breakout above the VWAP line. So right now Nike is actually treading down. Here was a small breakout going up. There was the small little yellow bar the person was talking about in the script. And I see what they mean. Oh, I see yellow bars. I see what you mean with your yellow bars. So, okay, I understand. And actually, right now, Nike is at a good buying point, and someone else noticed it too, because they bought it on the doji. Check that out, doji. So, Nike right now is a good buy. They are about to break out of a wedge pattern. Technically, they have just broken out of a wedge pattern, a downwards wedge, so it's going to pop up greatly. I'm going to say possibly even tomorrow, or even for the rest of this week. We could be seeing movement, and it is 4 a.m., so we could possibly be seeing pre-market movement, very soon. I like to go through and check out a lot of these indicators that I find blindly, because you can find indicators blindly on the internet, where it just gives you a little indicator number, and that's really all you get. You don't get anything else. So, or just a little like, here, throw this in your shared item box, which is right up here. You go up here to your setup. Let's zoom out here. You'll go up here in the corner to setup. It's a little gear icon. It'll say open shared item. You'll click on open shared item, and you'll drag or you'll copy your shared, TOS, whatever, and that's what it'll say in there, and you'll be able to get the indicator, and then you can play with the indicator and add it in your ThinkScript editor or your condition wizard. Your condition wizard is where you'll put in your buying and selling conditions, okay? And your ThinkScript editor is where you will be plotting all of your data, to make a nice little strategy, or bot, might we say. So, if we do a strategy here, and we wanted to create a new, then it takes us to the ThinkScript editor, okay? Now, if we want to do a study, okay, and create a new, then it takes us over here to the condition wizard. All right, so that's the big difference there. Now, we can take our strategies, or we can take our studies and turn them into strategies, okay? But you have to change certain things around, and all of your parameters, all of your inputs. You can't have doubles, and all of your plots. You can have plots, but all of those plots need to go to an input, so you might have to add a couple input. It's not the terrible thing if you can read and understand code and go, hey, this is missing. Okay, see, I can read code well enough. I can read it, I can understand it, I can write some basic code. But running through an entire code and, reverse engineering everything, not so quite good at that. But that's why I started doing this stuff, because that's where I needed help. I needed help reverse engineering, lots of these indicators. So that's why I decided to start doing it. And now that I've been doing it for about 2 years, I've gotten rather good at it. And I now just kind of want to be able to, share that, time and experience. It's been a really, really fun thing. I've really enjoyed it. I've been able to learn. It satisfies a particular need I have for, crunching data, crunching numbers. Staying occupied. That's been important here lately. We've got to do that. And of course, it allows me to make a little bit of money, while I'm stuck at home, like a lot of other people. So, the thing is, you've got 400 or so indicators, and now you've got how many more? We build all of these different strategies and things like that, just to play with them and see how they turn out. Interesting, I must have somehow made that bottom, yellow. But, I like having this, Arun up here, and we can have the momentum oscillator down here, so we know that when we're above, say this 50% line, that's a buy-in. And as we can see, the Arun up went well above it, okay, and then that this would be a sell. As we can see, the high was recognized, and then it started to decline in price, okay, and so did the momentum oscillator. All right, now we keep going down, boom, it drops out at the bottom. All right, as it drops through this bottom, and we're at a Now we should have reached a low, and it's showing some consolidation right here. So we might see a bit of a recovery. And if it comes back over the 0 line, then that is where we would program in our buy at. So what we will do is we will come in and we will use the Chand momentum oscillator and program the buy and sell signal arrows to happen, if it within so many bars, from under 0 recovering above 0 for 5 bars, okay, or 2 bars, or however many, we'll buy, and then we'll program it, to sell if it drops below, the certain, say this 50, for 2 or 3 bars. We can program some things like that. It'll be a lot more technical, of course, but either way, this right here should have been a big blow up in price. See how rounded off that is? Let's see, 121, 121, 122.54, 122.98, 123.72, 122.75. That was a nice run in price. See how it's rounded, it wasn't flat. That's how we can always tell. Those are big blows. So here would have been a good shorting opportunity, shorting from 128.84. And well, we could still be shorting. We would have probably bought it back, down here somewhere, at the risk of, and then bought back in possibly here, and then sold here, or, even here. So what we might even want to do is to buy here and sell here, and then buy here, and then, well, actually, no, we wouldn't have wanted to buy that yet. We would have still been holding on, and we would have still been shorting. So, okay, we would have waited. Okay, we might have bought it back right here as it crossed over, or right here. We definitely would have bought it here, and we could still be holding, and we might have sold it there. Okay, Nike's got some very good trading. I think I'll be watching Nike here lately. I think you guys should too. That's why I'm honed in on it now. And along with the